What's up, guys? It's February 16th, 2024. Hope you guys had a good trading day. Maybe if we have a gap down, it could be a major trend reversal. So let's get into it. I'm going to talk about the first 6 bars of the day. Then I'm going to go over the bars, talk about leg 1, leg 2, and where we're at the market cycle. The reason I make these videos is because I want the newer people to have a resource online. I remember when I was first started trading, it was so hard to find something credible. It's not incredible, credible in trading, because there's a lot of hobnosh on YouTube. But Al Brooks is legit, and the people that he taught is very good at trading. We have a gap down right here. Remember, a gap down is also considered a bar. And bar 1 has continuation, so that's good for the bears. Bar 2 is follow through, and bar 3 is follow through for the follow through, and this is creating a bear flag. So this is really good for the bears. Bar 4 creates a pullback, so this could be a leg 1, leg 2 move, and leg 2, there's a thing called second leg traps, and they happen often in trading ranges. Here we can kind of see that if you had a lot of time to get out, this vacuumed into yesterday's low and reversed up. That is a failed breakout because it shows the bears come down and then go up. Then they go bulls to get their leg 1, leg 2 move. So we have a tight bull channel, first pullback above the bigger time frame EMA, so I do have a bullish bias, but that doesn't mean I'm not afraid to go short. I just think a little bit more bullish, like, oh, this could be a double bottom. No continuation from the bear bars after this, and bulls get about, they actually tag the high of last week. So that's pretty good for the bulls, but they would want to see a breakout, right? We have a breakout into the EMA with bar 14, 15 bad follow through, 16 is really bad follow through, and then 17 looks like a good bar. I actually bought it. However, it didn't. It would be even a better bar if it broke past that wick. You guys see how it kind of stayed under the wick. So it'd be really nice to see it break out. But then we did get a buy the close rally. Didn't last very long, but we could draw a tight channel. So you get crushed shorting. You'd have to get out quickly or trade really small and average in, which it's a range day, so you can. But you could also make more money getting out and flipping. Tight bull channel into last week's range, and we start to stall. Bears get a micro double top with bar 32, and they go for a few legs down. This could also look like a bear flag, a bull flag, because we're above the EMA. So I do have a bullish bias, and I was buying these bars, but you at one point you do have to admit that this could be a lower high with yesterday's high, and we kind of get a midday reversal that fails. It becomes a deep pullback. The deeper the pullback is, the harder it will be for the trend to continue. For a good trend, we want to see like a 30% pullback, and what I mean by that is we can measure this as a leg. So let's just say the leg starts from here. Pull it up. I'm going to change these fibs in 2 seconds. I should probably change them first. Sometimes my fibs get extra levels, and I swear like I'm not adding them. Give me 2 seconds. Like, I swear, there's a gremlin that comes and changes my fibs. I don't understand it. I'm gonna change it to orange as well, because green's hard to see. Yeah, cool. I kind of want an orange popsicle now. So this line, this line is 30%, this line is 50%, this line is 70%. I'm saying the bull leg started around here. I mean, you can see there's a little gap, but you guys get the idea. They push up, and we push all the way into last week's high, and the market pulls back into the 50%. Had it pulled back into 30%, maybe the bulls would have more juice. It was a deep pullback, and bears see this, and I'm thinking about the first 6 bars of the day. I did get trapped going short here, thinking that we were going to let these bears out at a break even. However, it ended up being a higher low, and when you see bar 47, you have to admit you just have to get out. Reversal is also a breakout. So the bulls, the bulls are reversing off the 50% level, which isn't bad. 50% is a pretty common pullback level, but I like to see 30% pullbacks, and yeah, that's just a preference, I guess. Well, it's not preference. The 30% pullback is a stronger trend. 50% pullback, and bulls get a 2 bar. When I say a 2 bar reversal, 1 bar, 2 bar, On some time frame, this is a doji. Just like this, on some time frame, on a lower time frame, this bar looks like these bars, and on a higher time frame, these bars look like that bar. I hope that made sense. Say something if it doesn't, but these, so this is what it, okay, we're gonna move on and I'll come back to that. So a 2-bar reversal into the EMA with bullish price action trading above the higher time frame. I think that bar 49 is a good buy, and they go for 3 legs higher. 1, pull back 2, pull back 3, and look, it failed. So leg counting really does pay off. Breakout, pull back 1, pull back 2, pull back 3, 4, 5. It starts to fail. Legs 3, 4, and 5. It's hard to hit a with trend trade because they tend to be better fades, especially in range bound environments. If you were to fade 1, 2, 3, if you were to fade this, you could make a point here, but you could also fade higher. You could fade here, and you would make money. With the right context, this could always turn out to be a bull flag. It's a triangle. It's breakout mode. So they get the reversal, 3 legs higher. When this happened, I was looking for a continuation of a measured move of like these bars or maybe this bar. But bar 60 came, and as soon as bar 62 started to break bar 60's low, I got out and just reversed, because yesterday's high is always a good place. The previous day's high is always a good place to look for reversals. And that doesn't mean if it trades at the previous day's high to start smashing the reverse button, because look what happened here. This is the previous day's high for this day, and if you tried to reverse just because we're trading above it, you'd get slaughtered. Unless you had a wide stop and scaled in, but that's not a good idea. So when the price action lines up for a reversal above yesterday's high, I like that trade. It tends to be more of a tight risk to reward trade rather than a higher probability trade. A higher probability trade would be maybe shorting. This bar is really climactic, but a higher probability trade could be shorting bar 74 for a scalp, because we've seen a lot of momentum. But the more probability we get, the less profits we'll get, because we're trading higher probability means we have more information. At this point in time, we could bounce, right? So that makes it a tight risk to reward trade. A higher probability trade gives us more information. That's what makes it a high probability trade. We have more information, so we get less profits. Risk to reward, you get paid for having less information. So those are the two differences. Risk to reward, less information. High probability, you have more information. And if you're going to go for a tight risk to reward, you want to get 2R of your risk. So here, you want to get 2R. You're going for a high probability trade, you got to scalp out maybe 1R of the bar, the entry bar. So here we are, bar 62. It's becoming a gap bar after 3 pushes up. 1, pull back 2. Excuse me. After 2 pushes up, that's 3. 2 pushes up, second leg trap, second leg trap, second leg trap. Third is a better fade, and we get a sell vacuum into the higher time frame EMA. When we see strong bars, we have to ask ourselves, is it a sell vacuum or is it a breakout? In range bound environments, it's usually going to be a vacuum. In trending environments, it's usually going to be a breakout. Because if it was a good breakout, we would have broke out here, right? But we were testing resistance. So at the moment, it is a breakout, but then the breakout fails the higher we go. The probabilities change for the bulls, and it becomes more bearish. We get a higher high reversal. This becomes a bear flag, and we go for a leg 2 move. Consolidation under the EMA. Bulls are getting trapped. Bears are liking that. On range days, sometimes the pullback can be a little bit longer than we wanted, but actually check this out. I hope this is orange. Yes. See? Do you see what I mean? 30% pullback. So this is 30, 50, 70. Look, this was a breakout, 30%, and it kept going. And in reality, you could start from the high, but I think that's asking for a lot. But it also even makes it look more bearish, Because that is a big move that happened really fast, right? 20, 30 points, yeah. I wouldn't necessarily look for a measured move here. Actually, I'm tired of changing my fibs. I must be doing something wrong. See, it worked out body to body. You go here late in the day. Maybe you get it after hours, but if you trade with Apex, you can lose your account trading after hours on Friday, only on Fridays. So let's go over the leg one, leg two moves. And I trade leg one, leg two moves because these are the trades I wanted. If I knew about leg one, leg two moves when I first started trading, I would study the living hell out of them. They are awesome. They are honestly amazing. Because they're amazing because they show you that the market has already gone in one direction. But they also force you to be buying and selling at extremes. And if you're in a range, you can't get crushed. Like right here. If you thought this was going to get a leg two because it's a breakout, it actually forces you to buy at the extremes and you lose money if you don't hit out. Why? Okay, so let's go over the leg one, leg two moves. I'm trying to keep these videos between 10 to 15 minutes long. So top of the gap to the pullback, and it was met. You don't want to use the gap, that's fine. It's also met. Leg one, leg two. Leg one, leg two. You can buy this bar 12 and put it there. My personal preference, more so these last couple of months, has been to put it to the bottom of the pullback, and if it looks like I go for continuation, then I'll extend the target, maybe something like that, something like this. And the reason I do that is because I used to get trapped a lot into, I would have a winning trade, I'd be greedy, and the trade would turn around on me. So I started listening to the market. This is where the pullback starts. So that's where the pullback starts. It's not up to me to just make things up. What I mean by that is like, this is how I would trade. Like, oh yeah, awesome, I want more money, so I just put it there. Well, that doesn't make any sense. The pullback starts here. So leg one, leg two. Bar 14 I think is a breakout, so we're going to use the fibs, and now I have to change them. That's okay. When we're breaking out, we use, so there it is. That was met, and now we get the first pullback. The first pullback after a strong breakout is, it becomes a channel. So with the market cycle, it's a breakout channel range. There we go, first pullback, and it's met. Then bar 17 looks like it has good continuation, and I think that can go for a breakout too. Right there. Maybe you want to do it like this with bar 20 breaking out of bar 16 to 19's range. That's also met. There's so many ways to do this. It's just find what you like and make it make sense, kind of. That's met. Here, tight bull channel. If you went for a leg one, leg two, it's getting climactic, and it actually got met, but you have to sit through a really deep pullback. I'm not a fan of that. Leg one. Excuse me, leg one, leg two, leg three. We're trading at the highs. Start to look for, I don't think there's anything wrong with buying this. I bought this really quick. It failed. I just got out, and then I bought this. It failed, and then I reversed. This is a wedge bull flag, and it broke out to the downside. Let's see. There's three legs, leg one, leg two, leg three. Yeah, because leg one, leg two, leg three. I was trying to say this, leg one, leg two fails. It reverses. This is a good trap. I got trapped. I'll use the breakout tool because this is a breakout bar. That was met. And then the pullback comes, so now we have a leg established. And that was met. I want to see one thing. I didn't actually check this intraday. I should have been more. Breakout of the EMA to the high. That's also met. That's also met from a leg one breakout, deep pullback leg two. If you wanted to, let's do the pullback exercise. See, why does it do that? Let me change it to orange. Orange, Eminem. You guys listen to rap? Okay, so look how deep this pullback is. If we count bar 7, 16, 17 as the pullback, it went past the 50%. Oh wait, no, 30, 50, 70. It went past the 70%. And it barely went, it didn't even make a new high. It made a new high, but it didn't break out, kind of. I said that all wrong. It failed because the pullback was so deep. And remember, the first 6 bars of the day is bearish. Everyone's looking at these. This really sucks for the bulls. That just ruined the bulls. Because everyone's looking at the first 6 bars of the day. So I kind of lost my place. Where were we? Leg 1, leg 2. So here we are, leg 1, leg 2. Right there, it's met. And then we have a breakout, which we can tell it's obviously met with that big bar. What am I doing? There we go. And it's met here, so that's great. and then I showed you guys. So this leg 1, leg 2 is just a little too big, man. Honestly, you just have to be real with ourselves. Time of the day, it's only like an hour left. How much time do we have? However, we go body to body, and look at that. Met. Put it at the pullback level. Go from here. It's met. Yesterday's low can be your target, but it's coming close to the end of the day. Where are we in the market cycle? We created a double top. We have a lower high on the 45-minute chart. Does not look good for the bulls. However, something Al says is if you forget that there's two sides to every trade, maybe you should take a break from trading because your vision is getting cloudy. And this could very well become a bull flag. What the heck is going on? What I mean by that is this. Pull back, pull back, pull back. That gives us a double top and a double bottom. It becomes breakout mode. However, when we start to add layers of context, late in a bull trend, lower high, we've rejected last week's high. We're failing. The bear's target is going to be last week's 50% level. So that was a higher time frame analysis. Let me do the market cycle analysis now. I'm going to do it with this day. So we have a breakout and we trend, and then we go range bound right here. Then we break out. First pullback becomes channel phase, and then we range. Breakout, it fails, we reverse, and now we get a bigger range. Here, this is a range play short, shorting the highs, and we get the breakout with continuation. Breakout, range, breakout. The market cycle goes like this. I probably should have said it first. Breakout. First pullback is the start of the channel phase. Oh, excuse me. Let me draw it right here. So we have the breakout, and then we get the pullback, and now that's the channel phase. And then we channel higher for a few legs. That's 3 legs there. And after the third, fourth, fifth leg, we start to go range bound. And then we just wait for another breakout. And then it can go this way, or it can go that way. Doesn't matter. We just act. We just act how we're supposed to. Breakout, like 1, 2, 3. What the heck? 1, 2, 3, 4. Fade. Range bound, buy low, sell high. I'm willing to bet we could find this exact price structure somewhere. Right there. Look at it. Tell me that's not the same. Breakout. First leg. 2. Breakout 3. And now we're going range bound. So you see how all this starts to add up? Or it can go like that. Like literally right there. There's the proof of the market cycle. It's important to understand what the market cycle is so you can place trades around it. Hope you guys are learning. Thank you for all the comments. Please keep using your stop loss. I hope you guys had a great weekend. Use your stop loss. Trade small. Chart everything. Chart as many leg 2s as you can, because once you start to trade in your eyes, it's going to be amazing. I hope you guys are making money. I had a pretty nice day. I will talk to you guys this weekend. Have a good one, guys. Bye. And also, thank you for your support and dropping all the comments. I really appreciate everyone showing support. Okay, bye. Happy Friday, Monday.